Namaskar to all the learners and viewers of NIUS video program. I Dr. Piyush Prasad welcome you in our video program of NIUS. Today we have invited Mrs. Sukshamlata Mahajan, who is a retired principal from Rajgir Pratibha Vikas Vidyalaya, NCT, Delhi. Madam, we welcome you in our studio.
Thank you Dr. Piyush. It's a privilege to be here.
Learners, as you all know that the aim of every business is to earn profit. Side by side, they are interested in knowing what is their financial position at the end of a particular period of time. Now, the question arises how they would come to know the value of their profit or the losses they have suffered at a period of time, and what is their position in a business at the end of particular period. This means as how much they have to pay to an outsider and what they are supposed to receive from an outsider. This they can only do with the help of an accounting. So, today we are going to discuss some basic concepts of accounting. We are going to discuss on the bookkeeping, its difference from the accountancy, the basic features of accounting, and what are the different terms that we are going to use in our accountancy, because this is a very basic concept which each and every learner must know before they are going to proceed for this subject. Today we both of us are going to discuss on it so that your various queries and problems can be sorted out and you may be very well aware regarding all different aspects in accounting. Now, I will request the madam to explain something related to the term accounting.
Okay. Accounting basically is a way of recording, analyzing, classifying the data on day-to-day basis, so that we can ascertain what is the profit earned for a particular period of time. Because whenever we do business, the basic motive is to earn profits. So we can't be doing it on a daily basis. So we are able to remember whatever the transactions have been carried on. We record them in our accounts, in different books, and then at later stage we classify the different transactions so that we are able to ascertain profits earned during a certain period.
So, learners, there is another term, as madam explained you regarding the accounting, the another term which we are commonly going to use is bookkeeping. This is, there is lots of confusion regarding the term bookkeeping and accounting. So, here I would like to explain you that basically bookkeeping is an art of recording the business transactions in a systematic manner in books of account, while on the other hand accountancy is a somewhat a later stage where after recording the transactions we analyze them, classify them, interpret them and convey the information to the various users. Keeping in view these things in our mind, we would like to have some more differences between the term bookkeeping and accounting. Madam, explain our learners some differences between bookkeeping and accounting.
Okay. Basically, bookkeeping is the preliminary stage of accounting. First, we record all the transactions that have been carried on in different ledgers, and then at later stage, we classify the data, we analyze the data and then ascertain the profit. That is the accounting stage, so that we may cater to the need of different people associated with the business, be the shareholders, the customers, the debtors, the creditors. They all want to have detailed information about the business transactions, as we have joint stock companies in modern times. So the stake of shareholders is very important. So even the government requires that certain details have to be filed for legal purposes. So to analyze all the transactions, we make final statements, we make ratio analysis, we make financial analysis, so that to plan for future and to carry on the business at most efficient level.
So, keeping in with this, we can say that bookkeeping is going to be very initial stage,
primary stage
of recording the transaction.
Yes.
And accounting is a secondary stage which is supposed to be done by some experts, a very expert person.
Bookkeeping is a part of accounting. So, the moment we start bookkeeping, accounting starts. So it is basically a wider concept. Accounting is a wider concept, discipline. Bookkeeping is the initial part of it.
So we can say that bookkeeping follow the principles of accounting, and accounting is going to have its own principles.
Yes.
Fine. So learners, we have came to know the difference between the bookkeeping and accounting. Keeping in with this thing in our mind, now we are going to discuss on the various features of accounting. Madam, explain some features of accounting to our learners.
Okay. Accounting is done only for those transactions which are related to business and can be measured in monetary terms. We make some purchases, and the amount of money that has been transacted for that purchase will be recorded. But who we purchase from, what is the business credential of that person, that will not be accounted for.
So, I will clarify this thing with the help of an example. Suppose there is a building which is going to have the two different floors, a ground floor and a first floor, and the owner of the building is a one same person. Someone has taken that building on a rent basis. On a ground floor, he is going to have his shop on which he is going to pay some amount of money as a rent form, while the first floor he is used to as his residence and he is going to pay the rent for that residence also. Now, the question arises, as the amount paid by the person is same and the person to whom the amount is paid is also going to be the same person. Now, the question is that which particular amount is going to be recorded in the books of accounts. Here, as the madam has told you that only those transactions are supposed to be recorded in the books of account which are basically related to business. So, only the rent of the shop will be recorded in the books of account and the rent which is paid for the house will not be recorded. It will simply be considered as a drawing. So, only the rent will be recorded related to the shop in the books of account.
Exactly.
This is the very first feature, that only the transactions which are related to business are going to be recorded in the books of accounting. Now, the second feature which the madam has explained you right now is a money measurement concept, which says that only those transactions are supposed to be recorded in the books of account which are measurable in terms of money. For example, there can be number of things related in a business which are monetary, which can be measured in terms of money and which cannot be measured in terms of money. For example, the employees are very loyal towards the business. There can be lots of conflicts and confusion related to our suppliers. All these things will not be recorded because these things cannot be measured in terms of money. Anything which is measurable in terms of money will only be recorded in the books of account. Together with that, I would like to add some more point related to the features of accounting. The very first thing in this will be communicating the results to the various users. Now, suppose we have maintained the books of account throughout the year. We have appointed a big staff with us. Those who have recorded lots of transaction analysis has been done. Now, what's the use of it? It's not simply the businessman who is going to make the use of all those things. After recording the transactions, after analyzing them, interpreting the results is necessary. That means that these results are supposed to be communicated to the various users. Now, these users can be the shareholders, they can be the owners, they can be the suppliers, they can be the general customers, government and so on. Together with that, the accounting is going to have lot many features. It is simply concerned with making the payment of taxes to the government. Now, how the payment of taxes is going to be made by a businessman? So, in case of a salaried person, the taxes are going to be paid on the basis of the salary which he is going to earn. But how the income tax authorities would come to know that this is the amount of tax which they are supposed to levy on a businessman? The books of account which are maintained by the businessman will work as a proof for making the payment of taxes. Side by side, in case of any kind of disputes, these books of account will work as a kind of legal proof so as to sort out the disputes. Now, keeping in view these things are mind, I hope you are going to be very clear related to all the features of accounting. Now, we are going to discuss the various branches of accounting. So, madam, please explain our learners what are the different branches of accounting which we are going to have in our system.
As already explained, and Dr. Piyush has very rightly explained, we need accounting for different purposes. We have financial accounting, we have cost accounting, we have management accounting, we have social accounting, the latest in the accounting. So, for different purposes, for different kind of analysis, we need different type of accounting. In financial accounting, basically, we make financial statements to ascertain our profits, to ascertain return on our investments, return on shares, And cost accounting, we see what is the cost factor. What are the cost incurs? Because we have to know how, when you want to maximize the profits, your cost has to be maintained at low level. So for cost efficiency, we have cost management, and then social accounting. I talked. Social accounting is every business has a social liability also. If you want to earn profits for a longer period of time, you need to take care of social interest. If you want to maximize your profits at the cost of social liabilities, then your profits will not last for longer period. So those social factor, you have to provide goods which are useful for your customers. If they are not good, they will not buy it at the second stage. They'll buy it once, and after that they'll not buy. If you want them to buy your goods forever, for a longer period of time, you have to take care of their interests. So a lot of research and development is carried on to see what is the change in fashions, what is the change in mood, what is the change in purchasing power of different people.
So for all that, the accounts are to be maintained, and they will come under a category
then,
of the social accounting.
Then most important are management accounting. We have to plan for the growth of our company. Everybody wants to grow. So whenever we are making investments, it is to grow, to make the increase the value of capital invested by proprietors, shareholders in the firm. So we have to regularly plan.
So we have discussed related to the 4 different types of accounting, as the ma'am has told you, related to a financial accounting, then cost accounting, social accounting, and the management accounting. After discussing the various branches of accounting, we are going to discuss what are the various objectives of accounting. Every businessman is going to spend quite a good sum of money in maintaining the accounts department. They are going to employ large number of persons whom the salary is going to be paid. Lots of books are going to be maintained. So our learners would like to know what are the basic purpose of all these things. What are the objectives of maintaining the books of accounts?
Okay, the foremost of course is to ascertain the profit. When we are running a business, it is to earn profits. So we make financial statements to see how much profit has been earned during a period. It is done periodically. Normally it is 1 year, and then the financial statements are published. Then we have, it's a proof, I mean the accounting is a proof or a record of all the transactions. So whenever the proof has to be given, they work as a proof in the legal department. And then we tend to forget things. If we don't record the things properly, we tend to memory is short-lived. And in business, in a day, there may be thousands and thousands of transactions. You can't remember them all. So you have to record the transactions so that in a systematic way, whenever they are required, you are able to produce those.
So they can also work in solving out the disputes in case of the courts, and it's going to supplement the memory of a human being, as he cannot remember each and everything, and that to be after a long period of time.
Yes.
So these are the basic purposes we have taken into consideration for maintaining our books of accounts. Keeping in view these things, there may be some advantages as well as some limitations also. So now we are going to discuss on some advantages of accounting. So, madam, please explain our learners what are the basic advantages of accounting.
Okay, as I said, this is a permanent record of all the transactions that have been done. Then we can classify them as per the need of the company. Data is available for analysis. Then whenever, as you said, if there are disputes, they are a permanent proof, a liable proof, which can be given. Then we have income tax liabilities. There too you have to give the proof of your earnings during the period.
And in some of the cases, even the government has made some restrictions to maintain the books of accounts.
It is mandatory to maintain the book of accounts in a particular way. So every firm has to cater to that.
If it is a case of a small business, there could be possible that one person is not going to maintain the big accounts. We can take an example of a person who is simply a hawker, who is a newspaper hawker. Newspaper vendor can be there. They can be a milkman who used to supply the milk door to door. They also maintain the accounts for their memory's sake. They also record something at their own convenience, at their own pace, that how much they are going to pay to some and what is the amount they are going to charge. So for systematic purpose, for systematic business, Accounting is must.
Must.
Without accounting, we cannot expect a success of a business in a long run.
And then moreover, you have to authenticate all the
Authenticate
records.
also.
So it works as a authentic record.
Now, after having the advantages, there are lots of limitations also.
Yes.
Our learner would like to know what are the limitations of accounting.
In accounting, we have tangible assets, we have non-tangible assets also. Sometimes we tend to have window dressing in the records. As per accounting procedures, we can write off certain expenses, and like preliminary expenses are shown on the asset sides, which inflate your asset sides. In effect, those expenses have already been incurred.
So, in simplified terms, we can say
Yeah.
that in most of the cases, accountant used to do the manipulations in accounts. They decorate the account in such a way as per their convenience.
Yes.
Suppose, for example, they are supposed to take a loan from a bank, then they will inflate their profits. They will show more sales.
Yeah.
And in case whenever suppose the chances of taxes are supposed to be there, they reduce the profit, they show more expenses.
Yes.
Up to some extent, we can say that this is possible in accounting because this is a man-made kind of thing. It's not a natural science. So, window dressing is one of the limitations of accounting. What could be the other limitations other than that?
Man-made errors can be there, as you said. I mean, because it is done by human beings, so their personal judgments creep in.
So, we can call it as a personal bias.
Personal bias can also be there. Yeah.
As it is a man-made thing, so
Yes.
lots of things depend upon their own way
Personal
and convenience,
judgments,
personal
the way
judgment.
their convenience, their judgments. So those things creep in and affect the statements.
I would like to add some more points
Yeah,
to
sure.
supplement you. There are other limitations other than what the ma'am has told you. One thing is we have already discussed in the basic features that it only record the monetary transactions.
Yes.
There may be some another important aspects which are very much related to the
Very-
business
yes,
and
very
very
true.
important to the business also.
Yes, very
but they are not recorded. Our accountancy record only those things which are measurable in terms of money. No quantity, nothing is going to be shown in our books of accounts. For example, there can be furniture, there can be the goods, there can be some more things. Only their monetary value is going to be shown.
Sure.
The value of the building will be shown, the value of the car and assets will be shown, but their status, their position and their condition will not be shown.
Yeah.
This is one of the very big limitations of accounting from my point of view.
Yes. Now, like you said about building, only the purchase price is reflected in the books. Now, a plot that was purchased 20 years back will be shown at the original cost only.
So this
the
is
present,
another
the present,
limitation.
yeah, the present value will be much more, but will not be showing that inflated price.
So we can call it as a historical cost concept of
Yeah,
accounting,
yeah.
where we record the transactions in our books of account at the value at which they were purchased,
Yes.
and the market price is
book
not
value.
going to be
Yes,
shown.
yes.
So market price is going to be very much different from the value of an asset which is going to be shown in the books of account, due to which the analysis or the conclusion cannot be drawn accurately.
Yes.
Always they are going to be misleading. These are some of the limitations. Now learners, we are going to discuss some basic terms which are going to be used in accounting. Now until and unless you are going to be aware of those terms, you cannot proceed further in accounting. So for getting the awareness about all those things, we are going to discuss on some general terms. The very first term which I would like to explain you is the capital. Capital is basically a seed money or an amount which is going to be invested by the owner in a business. It is simply a kind of liability from the business to the owner's point of view. So the amount with which the owner has started up the business activity, the money which he has invested at the very initial stage is going to be the capital. And this capital is going to provide him the profit as a basis of ownership. Rest of the things are there common for all, but this capital shows yes, the person is the owner and he has invested this and this amount of money. This amount, it works as a liability for him, for a business,
Liability for the
for
business.
business, towards the businessman. And it's supposed to be repaid to the businessman at the time of leaving the business in case of various partnership firms, in case of companies and so on. And in case of a sole proprietorship, it will be paid when the business is going to be closed off. Now madam, you explain our learners some terms related to purchase and sales.
Okay. Purchase caters to those purchases which are made for purchase of goods for which are transacted in the business. For example, a shoe company will record as purchases all the materials that are purchased for manufacturing of shoes right? But similarly, when the sales are made of the products that the business is transacted in, it will be treated as sales, and the money coming from sales will be treated as revenue.
Okay. So, we can say that the things which are of in a routine nature for a business in which
Yes.
they are dealing on a
Dealing,
regular
yes,
basis
yes, yes.
are considered as a purchase and sale
Yes.
for them.
I'll give an example. Suppose a shoe company purchases a car. It will not be purchases. If they purchase some stationery, it will not be purchases.
Purchases.
Only the raw materials related to manufacturing of shoes will be treated as purchase.
Purchase. And similar is the case with the sale.
Sales, yes.
The sale of shoes for
Shoes.
them will be considered as a
As
sale,
sale.
as it is a routine nature item in
Yes.
which they are going to deal on a daily basis, and that to be continued for a long period of time.
Yes.
And in case if they are going to sell something else, like a old furniture is going to be
Yes,
sold,
that will not be
some old
treated as,
things
that
are
will
going
not
to-
be treated as
that
sales.
will not be treated as a sales.
Yes, yes.
Now learners, as I have explained you regarding the term purchases and sales as well as the capital, there will be a term as drawings.
Okay.
Learners, as you are aware that the amount which is invested by a owner in a business will be considered as a capital. Similarly, they are going to withdraw some money for their personal use, because they cannot wait for the end of the year when this profit will be calculated, and then they would be able to have their expenses. To meet out their day-to-day need, they keep on withdrawing some goods or cash on a regular basis from the business for their personal use. So, money which is withdrawn by the owner for their personal use, or the goods which are withdrawn by the owner for their personal use, will be termed as drawings.
In fact, if some purchases are made by the owner for his personal consumption, that too will also be treated as drawings.
Drawings.
Like he takes 7 pairs of shoes for his personal consumption, then that will be treated as drawings. And not sales or purchases.
Definitely, definitely. Now the madam would explain you regarding the term assets and what are the different types of assets.
Okay. Assets are tangible goods which are used for carrying on the business. They are of two types: current assets and fixed assets. Current assets are like cash, stock, debtors. They are used for a short period of time on a repeated basis. Fixed assets are one-time investment, and they are used over a period of time, for a longer period. Then we have intangible assets, which cannot be measured in terms of money, but they have a value. Like in partnership firm, we talk about goodwill of a firm. Then certain preliminary expenses are made when a company is formed. Those preliminary expenses are of a huge amounts. So they are not written off just at one go. They are also shown on the asset sides, and in a piecemeal manner they are deducted from profit and loss account on a regular basis till they are zeroed,
completely written off. So we can say that assets are all the valuable things which are going to be owned and possessed by the business, and they normally we categorize them into the two different categories as current assets and fixed assets normally.
Yes.
So current assets can be those assets which are supposed to be converted into cash very easily within the period of 1 year,
receivables are there,
and so on, so on. While on the other hand, the fixed assets are those which are going to be used in a business for a very, very long period of time, and normally they are not going to be converted into cash within 1 year. Maybe later on they can do so in case of the furnitures are there, in case of the buildings are going to be there, and lots many things are there. Now learners, as you know, there are going to be some assets, definitely there are going to be some liabilities also. Normally, liabilities are the obligations or the commitments which the business is supposed to fulfill towards the owner as well as towards the outsiders. We normally classify the liabilities into two different categories, as the fixed liability as well as the current liability, as we have got in case of the assets also. Fixed liabilities are those liabilities which are to be repaid after a period of 1 year. We take examples of the bank loans, we take example of debentures, long-term loans. Suppose a person has taken a loan from a bank which is supposed to be repaid in 5 years, then that liability will come under the category of the fixed liability. The capital which is invested by the owner in a business is also a fixed liability.
Owner's equity.
Owner's equity, because that is also to be paid after a long period of time. On the other end, there are certain current liabilities. These are those liabilities which are to be paid within the period of 1 year, short period of time. Example, creditors. Creditors, bank overdraft could be there. So, here I would like to mention the meaning of the creditors also. Creditors are those from whom we have taken the goods on a credit basis, or even the services have been taken from them on a credit basis. Now, no one is going to provide us a credit for more than a certain period of time. They may provide a credit of a week, 10 days, month, 2 months and so on, but not for more than a year. That is why we put the creditors into the category of the current liability.
Then bills payables are there.
Bills payables are also there, that we have taken some goods and services and we have signed a bill, we promise to pay the money after a certain period of time. So, the bills payable will also come under the category of the short term liabilities. Now, we have already discussed regarding the term debtors in assets. If I have explained you the term creditors, I would like to mention something about the debtors also. Debtors are those to whom we have sold the goods on a credit basis and we are going to receive the money from them in future. They are the debtors. Now, learners, keeping in view all these things in our mind, I am very sure that you are going to be aware about the basic terms which we are going to use in accountancy, meaning of accounting, how it is going to be different from bookkeeping, what are the features, objectives, advantages and limitations of accounting. I hope that all these informations are going to be very helpful and useful to you in our further process of teaching and learning. And these things are going to provide you a very basic base for other lessons. Keeping in view all these things in mind, I thank you Mrs. Mahajan to be here with us in our studio and providing such a useful information in a chit-chat manner to our learners. I hope they have enjoyed a lot for it.
Yes.
Thank you, ma'am.
Thank you so much. Thank you.
जीवन ये प्रकाशित करने, राहों को आलोकित करने, हम अपना दीपक स्वयं बने, हम अपना रास्ता स्वयं चुने।
सीमा से विद्यालय जो मुक्त हो, धन साधन समय की सीमा से विद्यालय जो मुक्त हो।
कभी पढ़े हम कहीं पढ़े, वे विषय की लोच से युक्त हो। मित्रों हम उठे और जागे,